Our next guest says the Fed will only ease by a quarter point, but that they have nothing to lose by front-loading cuts and going big with a half-point cut tomorrow. Joining us is Stephanie Roth. She's chief economist at Wolfe Research. So, Stephanie, it sounds like this is sort of a, I think they'll only do 25, but that they should do 50 kind of thing?
Yeah, I think that's fair. They don't have anything to lose, like you just mentioned. We have rates sitting well above neutral. Neutral is close to 3% in our view. So they have a lot of time to be able to cut rates. So if they go 25 or 50, probably doesn't matter, because the important thing here is they're starting off the cutting cycle, which we all know they should be able to do. And the economy is starting to weaken, and they don't have to worry about the inflation side of the mandate. Now it's all about the employment side. And whether they do 25 or 50, at least they're getting started. And base case is that, they do the 25, but it's a really, really tough call at this point.
Steve, I think they should go 33 and get rid of the range. And they go to 5 on the note. No more range. They just say we're cutting to 5% and you're welcome.
Well, with a person with as many kids as you have at home, the idea that you're looking for compromise and to make everybody happy does not surprise me.
If only it worked like that.
I also did that as the middle child in my family, looking for compromise. But in any event, I think the key is going to be 25 with a forecast for more to come. It'll be interesting to see if they forecast a full 100 for this year. That would be something of a salve to the market if they only get a 25, and what they forecast for next year. So those dots are going to be an important part of the communication, as will the statement. We'll see how aggressive the Fed ends up forecasting in the statement, which I like to follow very carefully, because as much as anything, that's a reflection of what the full committee can get behind. And speaking of the full committee, there's an issue. I'm interested in our guest view on this, whether or not the chair would have unanimous support on a 50.
Stephanie, what do you think?
Yeah, I think it's very possible we'll see, a dissent or two if they go for the 50. And that's the thing, is it seems like Powell is supportive of the 50. Perhaps that's some of the news stories that we've seen over the past week or so is kind of reflecting the leadership's view. So it seems Powell's probably in support of the 50, but is he going to get support of enough folks that they can actually go through with the 50, which is why we ultimately are calling for the 25, just because it's going to be difficult to get enough of a quorum. So base case is that they'll go with the 25 and they'll get everybody on board. If they go with the 50, it's possible they'll have some dissents along the line. Quickly,
I want to bring Rick in a second, Stephanie, but were you struck, as I was, or am I missing something, that the retail sales report comes out? Not only is it, we can talk about the consensus, but we all know the whisper was that it was going to be really weak. I've heard people talking for 3 weeks about how they were concerned that this retail sales number was going to be weak. The headline, I think, was up 0.1 from July, which was decent. The core was up 0.3. So as I understand it, the GDP sort of gauge that puts GDP, like Steve was saying earlier, 2.6% annualized for the third quarter. I think to myself, well, clearly this is going to make the case for 25. I go and I ask my team for the market odds, Steve's team, and they've risen to 65% for a 50. What am I missing?
Yeah, I mean, so what we've seen over the past number of months is that the credit card data, which a lot of people use to help forecast what's going to happen in terms of retail sales, has been understating the print. Perhaps some of it has to do with immigration, and folks who are not on traditional credit cards are spending, and that's lifting the print to some extent. But we've seen the credit card data underestimate what's going to happen. So we got a decent consumer spending number, which has been the case for much of this year. Consumer spending has been tracking well above trend. The market is just looking for this 50 basis point cut. Whether or not we get it, maybe it doesn't matter so much, because if they do a 25, they're going to do it dovishly. If they do a 50, they'll do it hawkishly. So perhaps there's just too much emphasis on this debate between 25 and 50. But what we're seeing is a consumer that's kind of holding in okay. And our base case is the labor market is actually okay too. So realistically, this is what a soft landing looks like. And it's going to be up to whether the 12 people in the room who are voting are going to be in support of this 25 versus 50.
Yeah, that's an interesting wrinkle about the retail sales as it relates to immigration. I hadn't heard that. Obviously, there's a lot of areas we're looking at to see if there's either seasonal distortions because of immigration, unauthorized or so forth. And it's just a sort of data point I think we need more clarity on. Steve, what were you going to say?
I was going to say that there's fast money and there's slow money. Fast money cares a lot about the 25 versus 50, and they're going to come in tomorrow and express their pleasure or displeasure. I think from a long-term investor point of view, follow the guidance, figure out where the Fed is going, and let's listen to the answers from the chair about why they're going there and how far they have to go. Those are the things I think that are going to be ultimately determining bond and stock prices over time, apart from the gyrations you're going to get at 200001 when that statement comes out tomorrow.
Yeah, and then the presser, we'll see how that changes things as well. It's going to be an interesting afternoon. But thank you both. Really appreciate it. And we'll let you go for now. Steve Liesman and Stephanie Roth with